Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. At least we're feeling good here in the United States. Must be pretty bad in Japan if they close the school for a month. You stop and think about parents that have to work and now their kids are home. Shut the front door and raise the rent. My goodness, that would be a toughie. Let's take a look at something that we've been waiting to get into. It's finally starting to work, and that is the platinum market. We got right down to our level. Down to that 904 level. We're up about $12 from there. So if you're in that, put your stop at your break-even point so you don't risk anything. That would be the best way I would look at it. Folks, there's so much news coming out here today from things you just don't know what's true and what's not. So we'll see. I did put the platinum there we go. I'm just a little too slow today. Sorry, folks. I've got a few things to cover. We're going to have Arch Crawford as our guest. He has some very important message about something that's happening astrologically over the weekend, that he's expecting something rather sinister to happen over the weekend, and the way these stocks are acting, I don't know. Now, let me get into just a little bit of stuff that I've worked on over the years. What I did last night was I sent out a AI, my artificial intelligence forecast for the ES, and I sent this out. As you can see here, it was about 1 o'clock in the morning. This was New York time, and as you can see, we were looking for a high to come up here, up in that area, around 3107 is what we were looking for. The high was actually 3104, but I just wanted to show you what actually transpired as we were looking at that, and you'll be able to see here that it didn't do it did a pretty good job actually of looking at what the market was going to do. Remember, we had this 24 hours before it happened. Why that occurs, folks, I don't know, but when you're looking at a price and time chart, everybody focuses on the price section because time is the most elusive. What Dennis did when he developed this, they looked at a vibration in time. In other words, what was happening in time. The only way you do that is to look at the time cycle. And the way they did that was looking at a MIPS computer, the millions of integrations per second, and it came up with certain vibrations. But when they work incredibly well. So what I'm going to do now is we're going to do something we haven't done here before. We're going to do it right now. So here's what we're looking at today. I believe this is the one I want to see. Yeah, well, here, I'll do the gold. Well, I'll do the gold market just for the heck of it. The one I want to focus on this morning is the bonds, because this is Dennis Regan. He was the fellow who developed this AI program. Let me get my train of thought back here and get you moving here. This is the one I want. Yes, here's the one I want to show you. All right, here is what we're looking at today in the Treasury bonds, okay? This is the forecast for the Treasury bonds. Now, you notice that up in the far right-hand corner, you see that that 1.69 level? We hit that just a few minutes ago. Now, the 1.619 is important because of this. If you take a look at this, we've had this up for quite a while. There you see, it just made that ABCD target, folks. Now, whether that means anything or not, I don't know, but it made it. Anyway, you don't have to risk very much. If the bonds get above 109.10, you're wrong. That's the bottom line. You pays your money and you takes your choice. Now, I've had a question about something related to cycles that someone brought to my attention that absolutely startled me, and that is from the Hearst book, The Profit Magic of Stock Transaction Timings, and that is the what are we looking at as far as what it means? So I've copied a page out of the book. Now, the only person I ever met that used half-span moving averages was Peter Elides from Stock Market Cycles. Peter's, I still think he writes his letter, but he's retired up there in Santa Rosa, California. But basically, what this is, it shows the cycles that you're looking at. You can see the little dotted lines. I drew in the blue lines just so you can see the ABCD patterns, because that's how I started started looking at this back in 1971. What a half-span moving average is, if you see that dotted line, what Peter did was he would shift that dotted line over into the next cycle, and that would give him a prediction of where the next cycle should crest. So that's what that was all about. So that's all I know about it. If you want to read more about it, you can get the book Profit Magic of Stock Transaction Timing. You can get them on eBay or Amazon used books easily, because they sold quite a few of them. So that's the problem with the Hearst book, folks. Several of the things that he worked on, the summation cycle is still there, but it really comes down to I think it's related to the astrology, but frankly, I haven't figured any of that out enough other than the new moons and full moons and some Mercury stuff and the stuff that Shane's worked on. But we do have Arch Crawford on today, and he's one of the stock market timers, so maybe he'll give us an idea of what he's looking at for the weekend here. So that's what we're watching here. I'm thinking of putting together hold on just a second, folks. My beeper's starting to go, and I wanted to see. It's probably the bonds, is it? Yep, there we go. The bonds just got up to 01 again. Very, very critical now. And if we get above 109.10, that's where I would think the sell would be. Of course, if you get up there, you want it to get below there and then sell it on a way down is what you want to do. The actual number of that ABCD level is 109.03. So just watch that of what you're keeping a close eye on. That's for sure. Another one, folks, that we need to talk about here this morning is the natural gas. You can forget about natural gas for now, folks. We've broken down below those numbers, and you just have to wait. Now, a lot of this is related to what's going on in the news, because it's disrupting supply chains and all the other stuff. So you just got to be really, really careful. But that's all I can tell you. It's not the end of the world. But if you remember, yesterday, that 3110, that was 4 standard deviations down from the high. We are 5 standard deviations down from the high, folks, boys and girls. 5 standard deviations. Do you know how many times that has happened in the last 40 years? Ta-da! Drum roll, please. October 1987. So we got to be careful here, folks. This is crunch time. So I don't know. So we want to listen to hear what. I'm not saying there's going to be a crash or anything like that, but there's a big problem. Just take a look at this chart that Maria sent, and we got a really nice rally off of this thing. This thing rallied. We rallied all the way up to the 3175 level yesterday. That was right at a 382 retracement of that whole drop. And, this is what we're looking at. This is a very bearish market that we're going on here, and you have to be extremely careful. I hope that makes sense. I'm just giving you my 2 cents worth. And believe me, at 2 cents, it's probably overpriced, but you never know. Okay. We'll have a break coming up here in just a minute, and then at the half hour, we will have Arch on for a cameo appearance. He wants to explain to us what is happening, and we'll be able to look at this thing. And Dennis Regan, R-E-G-A-N, he's the gentleman in Bakersfield, California, who I met back in long time ago. He was the developer of the Tomahawk missile. That was his claim to fame. He was the one who developed it. 877-927-6648.
If you're not currently using the Taz Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The Taz Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've posted the couple of things that I was looking at over last night and then today, and then I posted the AI for today. I know it's the end of the world out there, but watch it at 10 o'clock. That's in about 50 minutes because we could be reaching a bottom down in here. And the fact that the bonds are not, 2.5 points higher than we might expect them to be, pay attention to that. It may or may not mean something. Remember, these things fail, and when they fail badly. So you have to use a stop and you have to protect yourself. If this works today, I'm going to offer for the month of March, those of you that want to try it for a month for $100, I'm going to do the crude oil, the gold, and the E-mini S&P, probably throw in bonds or something else. I'll do it through Europe and then also through the U.S. That'll be $100 a month if it works today. If it doesn't work today, we won't do it at all. How's that sound? Okay, let's move on. The euro, we're almost at 110. It was a buy down there at 107.80. This would most probably be the place where you want to start looking to take a profit, folks. That's the area we were looking at before. We're very, very close to that right now. So I would certainly look at that. The Japanese yen that we liked at at 89.44 is now trading above 91. That's another one that I would take profits on. And those are the two that we've been involved in that we think look pretty good. So this is where I would be taking the profits today. So the news coming out is so very bearish today in the coronavirus that it's just really, it's sickening how they bring the stuff out. I mean, I just don't like to watch it, but I hear repercussions of it from other people that send me information on the net that I try not to read. So just make a look at it. Yesterday, I happened to be involved with Tom with the Tesla, and I have to show you. I will look at the Australian dollar for you, Ruby, in just 1 second here. You can see the near perfect fit that we had in Tesla yesterday, so that's a nice one. Now we're going to have a quick run here at the market here. Let's just get a quick one here for the Australian dollar for Ruby, and we'll be right up here. I think it's probably still heading down, but we're having a little bit of reversal today here in the Australian dollar. Let's get this up here. Yeah, we're almost there, Ruby. I would say yes. I would say we're at that 1.618 expansion, and the ABCD. Let me get this up, and we'll let the other folks see it. It looks like that's what's happened. Let's take a quick look at this, folks. You'll notice that we made that high at the 61% retracement up there at 70.50. That was the culmination of the 135 pattern that you can see through August, September, and also November, well, right up to it, and boom, here's where we are now. We're at a 1.618 expansion of that move and 127 off of the bottom in August. I think we're going to we've already bottomed a little bit here. The low was 65.42 or 65.80. Ruby, if you're in this, it should not go below 65.42. I would certainly not risk more than that. You're risking about 30 pips there, and I wouldn't risk any more than that. That's the main thing to look at. And I could be totally wrong here on this thing, which I am quite a bit. So be careful. Let's take a quick look here at this natural gas, folks. It's died a slow death here. It looked like we were going to be right. We had a huge profit in it at one time. Hopefully you were able to protect it a little bit, but you can see here now that we are knocking on death's door again. Let's just get this up here. And boy, I'm not just joking you here. This is you might be able to hear the sirens from the police on the escort to the cemetery on this one. We've taken out the lows of February now. We're below the old the 75, 76 level. We're 74.80. Folks, we stop right here, or we're heading down to 160. That's the way it looks like. We're at 174.80, and anything below 174, 173, I mean, I don't know what else you can do. I mean, they could go to, see, we're right at that 1.618. We've touched it again. Remember, we rallied $2,000, folks. $2,500 up into that 2,000 level after that 175, and now look, we're back down to where we were. This is not good bullish action, but the fact that we made the lower low back on February the 11th and we haven't totally collapsed yet could be very important. So watch it intraday to see if it's going to have a potential reversal. That's the only thing you can do. You certainly know what your risk factor is here. It's trading at 174.40. You can risk $200. So that's the bottom line. But make sure you look at it very, very closely. I think that's the thing that would be the most important to watch. So that's what I'm looking at today. I don't know if it means very much or not, but we'll have to do one thing at a time. The other one that looks interesting, of course, here is the gold market. Let's just get this up here. I've already did this once. Let's just wait here a little bit. By the way, someone's asked me a question. That ABCD in the gold, the Treasury bonds, measured to 169.03. So far, the high has been 169.04. This is with the stock market down a lot. So, folks, the bond market is so much bigger than the stock market. Where is this money going to go if there's a real panic? I don't think it's going to go into gold, but, something's going to happen. I don't think there's going to be a panic, actually, but that's just my 2 cents worth. I think that the people in the what do you call it? The media has just let up on Mr. Trump for a slight, and they found something else to beat up, but. I don't know. It just doesn't. I don't know. I'm just a technician. Hell, don't believe me. Half the time I don't know what I'm doing. The other half I'm not even sure about. All right. Anyway, keep an eye on this natural gas, folks. The safe trade to do is if it gets near the close and we haven't gone below that 174, that's the place you probably wouldn't have to risk very much at all. You just buy it here, risk $2. That's the bottom. If we get above 169.16 in the Treasury bonds, I would say that most probably that this thing is wrong and there is going to be some type of a panic, but who knows? It's just going to be very interesting to watch as we walk through these things. Okay, I had a couple other things that I wanted to mention here, and the Bitcoin, let's just get this up. Bitcoin went right down to that level that we had discussed here. Where is the darn thing? Here it is. We went right down to it. Let's get it up here so you can see we're right at that 78% level now. We got down to that 8,000. What were we looking at? 8,800, and the low was 87.50 or something like that. And so that should be complete now. We had a beautiful ABCD there in Bitcoin. That's also a 382 retracement from the low on December the 16th. Has to hold right here, folks. Anything below 8,500 is not good. In Bitcoin, is the way I would look at it. Maybe you know what? I just figured out where the flight to quality will be. Canned goods. That's interesting. Okay, we're going to put a canned goods spread on, folks. We're going to go long March canned goods and short September canned goods at the market, and plastics. Plastics is another one. Remember that? What a great movie, The Graduate. Thank you, David, for posting that in. We're going to have Arch Crawford as our guest. He's got something to talk to us about. He sent out a special note about this big astrological thing that's happening here over the weekend that we probably should pay attention to, because Arch is one of the Timer Digest traders of the year, and he's always ranked way up there. So it's important to pay attention to that. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he's watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and with a great deal of pleasure and anticipation, we have Arch Crawford from Crawford Perspectives on the line. Arch, how are you doing today?
Very well, thank you.
That's good to hear. Arch, you had in your letter that you sent out to your subscribers, you had a alert coming up. You want to tell the folks what you're looking at here astrologically?
Did you tell them what I said?
No, sir. I saved that for you. I'm not smart enough to repeat, so you've got to do it yourself.
Well, I just sent this note out to all subscribers. When markets have shown an accelerating downward pattern, Crawford Perspectives has been amazingly accurate in predicting the exact day of a potential crash. We cannot guarantee that any particular event will be decisively accurate, but we do have a good record, better in this type of event than at ordinary times. Astro events on Thursday evening through Friday evening, the 27th and 28th, seem unusually, even startlingly fateful, causing Crawford Perspectives and Arch Crawford to warn of significant further damage to stock and commodity markets with attendant potential increases in gold and silver prices.
Wow, okay. Is there an astrological event that is causing this, Arch?
There are several. You know, I had mentioned in the February newsletter, I said here on February 28th, seriously negative day today, 3 negative planet-to-planet aspects. Please be careful. Tough day. Venus squares Pluto with Sun at the midpoint, semi-square both.
Okay.
So that's
folks. This is from a gentleman who was spot on the crash of 1987, because that's when I first met Arch. So what do you think? Well, there's so much news coming out, Arch, that you really don't know what's true and what isn't. But
that's true.
When they close the schools in Japan for a month, I mean, that is catastrophic, because you stop and think of the parents that have kids that they're in day schools and stuff. Now, where are you going to put those kids? You can't just leave them at home by themselves. You know, this is it's really quite. Of course, there's not a lot of little kids over there, I guess, but I don't know. It's really scary to see the news coming out. And a couple of weeks ago it was nothing, and now every day they're even getting off of Trump's back and jumping on the coronavirus. So they're probably, I know what they're going to do. They're going to say that he brought out the coronavirus to give him a little break. That's probably what they'll say. Arch, what do you think will happen to gold? What's your upside target on that?
Well, I was number one gold timer for the year 2019 and number one gold timer for the year 2006. And it's looking at the hourly chart this morning, it looks like a rounding pattern headed back to the upside. And I think if the market goes down $500 a day here, then gold and silver are going to go higher. I'm pretty sure of that. Now, I woke up day before yesterday morning and read the new Timer Digest, and surprisingly and unknowingly, I've popped up to number 2 in bond timing also.
Well, very good. What's your outlook on bonds, Arch?
Higher. I don't know if we're going to go to negative, but it's highly likely. Mm-hmm. Rates.
Well, it's certainly possible. The way things are going, they're doing everything they can to get up there to that level. That's for sure. How much is the stock market down right now? Are we down 500 in the Dow again?
500. Well, it's bouncing. It was 502. Now it's 492. Now it's 501. Now it's 503. 507. Okay. That's how it. Okay. But it's bouncing in a tight range.
Okay, well, listen, I want to thank you for being on today. We'll be watching this. Hopefully we won't have a crash, but if we do, we're going to give you due credit for it for sure. But you certainly called a couple of down days here very dramatically. We want to thank you for that. So thanks for being our guest.
We doubled up short in the newsletter Crawford Perspectives, which I've been publishing for 43 years. And,
43 years.
Which is the same price it was in 1977, $250 a year.
Wow. You're due for a $5 increase, Arch.
I think so. I'm not following inflation, or I'd be a lot higher.
All right, listen, you have a great day, my friend, and thanks for being on and sharing with us what you had on your mind, because I think the folks will certainly pay attention to it. So thank you so much for being on the show, and may God bless you and Joanna. Take it easy, my buddy.
Thank you so much.
You bet.
Blessings to all.
You bet. Yep. Arch Crawford Perspectives, Tucson, Arizona. Okay, we've still got the market selling off. Bonds trading 169.01. The high has been 07. So we're going to see what happens there. How are we doing with the old gold? Let's see what the gold is doing. I've lost track of the gold. Just give me 1 second, folks, to double check here. Then I'll be right back with you, and we will go through the rest of the gold. Let's see, what have we done here? No, that's not good. Folks, pay really close attention to 10:30 and 11:30, because if the Fed's going to do anything, they're probably going to do it around that time, would be my guess. And so, as Shane has told us, they do come in and do those operations. So we're down more than 5 standard deviations, folks. That's only happened a very, very few times. So that's one thing that we really, and the reason why that's important, folks, is because the options players, they take the price on Friday. That's the average mean price, and then they move their standard deviations from there. When you go 2 standard deviations, they're scared. 3, they're really scared. 4, they're petrified, and we're at 5 now. So this is why it's so very, very important. So keep watching that. It's extremely important. Remember, the bond market is much, much bigger than the stock market. I mean, many times bigger. So that's another one. Since we're talking about the bonds, let's take a quick look over here at the junk bond market. Okay, this is the one that's related to the oil. Now, you'll notice here we had a double top. You'll see the head and shoulders pattern that we had way back in 2018. That was the top of the market. We made a double top almost to the exact area when we had that butterfly pattern form, and now we've had the gap down. You can see that they've really done very little. You've gone from 88 to 86.5. I mean, that's nothing. So there's no panic in the high yield bond market as of yet, but it certainly could happen. And we've always said that the real problem is not in the stock market; the problem's in the debt market. And whether that's going to be true or not, we don't know. All I know is today is going to be a pretty key day to look at that, because you could get panic hitting at any time, in the way that Arch just told us that might be the thing seen here. Okay, Ruby is talking about the Canadian dollar. Let's just take a quick look at that one, because we have had some really good luck with that Canadian dollar. We'll get it up here so we can see it, and then you'll see that it's had a heck of a move here, and we're on its way here. Once we broke down, you'll notice that we are heading down a little bit lower. We'll be right back. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, I posted the chart of the Canadian dollar. You can see after we made the 61% retracement, we had that really quiet 2-week rally. Oh, my goodness. Yeah, you talk about something that looks bearish when that happens. And as you can see, once we started down, we broken, and the objective on that is a great deal lower. So that's what it looks like on the Canadian dollar. The U.S. dollar, we did get up to that level, and we backed off somewhat, which is good. So we'll see. Jimmy's posting in here that the March 20th put-call ratio is 6-1, and that is a strike price of 30.50. Well, you know what that's going to be doing. You know, I can imagine. I don't follow the bond or the puts and calls. My friend John Jameson does, but no, this volatility insane. Maria, this is no volatility at all, dear. Let me tell you what volatility is. Volatility is not in October of 1987, when the Dow was down 16%. That would be equivalent to 4,500 points today. Very hard to get elected president when something like that happens, but it's neither here nor there. But that was really volatility. In the pit that day when it opened, the S&P opened down. We were trading at about 260, as I recalled. It opened at 250. Which these were big handles. In other words, instead of $50 a point, it was $500 a point. And the spread between the bid and the offer in the pit that day was $5,000 to $10,000. That was, if you wanted to buy, you had to pay $10,000 up. If you wanted to sell, you had to pay $10,000 down. I mean, that's how wild the spread was. Options, the option players wouldn't even make a market. So even if you were short, if you were short, and I was short on the 16th of October. They expired on the 16th, and I was really happy that day because the Dow was down 104 on the 16th, and I had a whole bunch of puts that I had put on October the 2nd that paid for a whole lot of education stuff and a whole bunch of other stuff. But if I'd have held those, I'd have added a couple zero, but you couldn't really get filled until the 20th, because that's when the plunge protection team was instituted, and it was, I think it was Greenspan, and then Rubin, and I think Larry Summers, I think, might have been the other one. I'm not even sure. But they came in, and they basically, what they said to the banks and the brokerage firms, he said, boys, the window is open. Take all the money you want. The stock stopped going down today. And that's exactly what happened. That was the bottom of the market. It was exactly 61% of the low from August the 9th 1982. If you don't believe it, just go back and look. Those of you that don't believe in Fibonacci numbers, you might want to check some of these, because when we got to 2009 on March the 5th, guess what that was? That was a 61% retracement of that other low. So that's what's really important. So anyway, that's what's going on. People that didn't do anything during that time, they didn't even know that there was a problem. It ended up being the biggest buying opportunity of the 1980s, actually, other than 1982. So that's what happened. I remember, because I thought that at that time, I thought that was the start of the Great Depression. But about 6 months later, I realized that that number was so powerful that it came out of here that I had changed my mind, and then we started to see it going up to see what's going on here. As a matter of fact, Jimmy's saying he's going to buy some calls here. Hey, Jimmy, there's an old saying from the old Merc. You got to buy them when they're crying and sell them when they're yelling. And baby, there's yelling today. The pigs are on the porch, so we'll see. Anyway, I don't know if it's going to be. Hey, the key, folks, it's real simple today, folks. Watch between 10:30, next 45 minutes to an hour. If the market's not collapsing after that, it's got a chance to return around. That's the bottom line. I say that for two reasons. One, gold ain't going nuts, and bonds made their target. That's all I'm looking at. I don't know diddly squat about fundamentals. I don't know what the Fed's doing. Nothing, but that's it. And the crude oil should be bottoming down here, too. I think I posted that one there. Watch the crude. I think that's around 11 o'clock, or 10:30, 11 o'clock, too. That should be making some type of bottom. So a lot of stuff is coming together today. But, if it works, fine. If it doesn't, what the hell? Don't make any difference anyway. We had a question about the Hearst book. You can buy that Hearst book, real easily. I think you can get it on Amazon and stuff like that. I have it on a PDF file from many, many years ago. I think I mentioned before that Jim Hearst was actually my customer when I was at Drexel. I met him through my friend John Hill and Peter Elides. He opened an account with me. He did 2 trades with me, as I recall. Both of them were profitable. They were in commodities. I didn't have any stock accounts at that time, and I think one was in corn, and the other one was in Treasury. No, it wasn't Treasury bonds. Yes, it was. I think it was Treasury bonds, because the bonds started trading in 76, and he was my account in 78. So it probably was. We had 2 accounts. He didn't like trading. He retired up to Grass Valley in Nevada City, up there in the Sierra Madre Mountains up in Nevada. And the main thing was Sierra Nevada Mountains, not Sierra Madre, Sierra Nevada Mountains, and he fished. He loved to fish, and that's what he did. And I introduced him to Ed Dobson of Traders Press, and they reproduced all of his stuff in a video for the Cyclotech information that was done. The problem with it, folks, half of it doesn't work. The mechanics work okay, but the cycles they shift so much. And the reason why they shift so much is I believe they're astrological, but I only see bits and pieces of it. And I'm telling you, like I see it. I see. When I see the Bradley model working all the time, I know it works good. When it doesn't work all the time, I say, well, maybe there's nothing there. But I watch the full moons, I watch the new moons, I watch Mercury retrograde, and we've seen, some of these things work and some of they don't. Who was the cycle guy that published the expensive book at the same time? I don't know, unless you're talking about one of those GAN guys. Oh, it might have been Wells Wilder on the Delta system. That he might have done that. It was like $3,500. It was based on the 18-month nodal cycle. That I think he sold that for quite a bit. That might have been who it was, Bill. I'm not sure, but Wilder, he's retired and he does very well. He's very, very successful trader, by the way. And I bought the Delta stuff, but I couldn't get it to work. So I try to keep things as simple as possible, folks. I look at the simple patterns, to protect the risk, and that's really the bottom line of what I'm trying to do. I think it was, but I'm here again because there was a lot of stuff being published during that time, and I don't know who all did it, but that one I did remember because I had several of my friends that were doing it. So that's one of the things that we're watching here. So, we've got a situation now in these bonds. We're up to 69.11, folks, above 69.16. Where this thing might go a little bit further. So we'll see. 03 was the number. and all I did was I had half a point to that. That's just my assumption of what I'm looking at here. So we'll see what's going on. We got all the way down. Wow, we rallied up to 30.70 in the S&P, and then we dropped down to 30.35. Watch 10.30, folks. That's the key time, 10.30 to 11.30. If it's going to bottom, if it's got a chance, that's the chance that we're looking at. So that's all I can say. Nothing more, nothing less. We'll just look at it and see what's going on, and we'll just watch it and see what goes on. I hope this helps. You know, it's going to be an exciting day. If nonetheless, I think that will be the part that will be good. So, and also, that's it, 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, let's take a quick look here. One thing we want to remember, folks, it's never as bad as it seems or as good as it appears. So I don't believe any of the stuff that's in the news. We'll get through this, that's for sure. The mortality rate on this is much less than SARS, and certainly not anywhere related to the bubonic plague at all. That's totally different. And remember, back in the Middle Ages, they didn't have hospitals, and they didn't have contagion centers, and they didn't have doctors on every corner. So it's not going to be the end of the world. It's going to be tough, but we will make it through, just like we do everything else. It's not like a world war, even though it could be. Hopefully that's not going to happen. Folks, the key time today is to watch 10:30, just a half an hour from now. An hour from now, if we're making new lows, it's going to be really bad. If we make a bottom in here, there could be one hell of a rally. That's all I know. We haven't been down more than 5 standard deviations one time in 40 years. That was October the 19th of 1987, and I don't think that's going to happen. The bond market, to me, just looking at it, the target was 169.03. The high was 169.13. We're now trading at 169.01. Stocks are giving a little bit of a bounce in here. I'd also be covering crude oil at around 9:30, 10:30. Just a lot of things happening around 10:30, folks. That's what it looks like. Whether that means anything or not, I'm not sure. I certainly had a nice conversation with Arch, worrying about what could happen over the weekend with these things that we have going. So we'll pay attention to that also, and we'll be able to see. But the we're rallying. The Dow's rallying 150 points and dropping 150, 300 points. So it's not for the faint of heart. If you don't have a technical picture to look at, stand aside and watch it. Maybe learn from it. The other one is to watch that natural gas, because if we can keep it around this 174.60 level around 10:30, it still has a chance. I mean, very slim. And the only reason I say that is we took that low out of last week at exactly 1.618 at 174. Excuse me. And we haven't gone above it, but haven't gone below it either. So that's what we're watching. Live every day in an attitude of gratitude, and may God bless.